This is a long-term thing. You got to do some long-term planning. But like if you're a millennial, you actually have an amazing opportunity right now. Now, 98% of the people will not take that opportunity. It's just a fact. You know, they're going to do the wrong thing. You can always count on people to do the wrong thing because they're going to follow the trend. They're going to follow the herd, and the herd says, buy the house, settle down, plunk this, that's what the herd says. But you have to go the other way. If you want to get rich, if you want to do better than the average, you have to do something different than the average. And so I think, I encourage, younger people to say, your best bet right now is to put all your eggs in Bitcoin. That's your best bet. And if I was 30, I would have 100% of my net worth in Bitcoin. That's what I would do. Maybe not 100, maybe it'd be. The good news is we now have this pool of capital, which is 10x what it used to be. That's just great, right, for Bitcoin. And that's what's going to propel Bitcoin to that, that we need that pool of capital if we're going to get to 500,000 Bitcoin this cycle, which I think we will. But we need the massive volume of capital.
Fred Krueger believes that over the long term, Bitcoin is the best opportunity of all time. Many millennials and Gen Z complain that older generations were able to buy houses and real estate at cheaper prices compared to their wages. However, mathematician Fred Krueger believes Bitcoin is a far superior opportunity. Yet 98.5% of people are not going to take the risk. For those who don't know who Fred Krueger is, he is an extremely successful entrepreneur and investor who also has a PhD in mathematics from Stanford. However, after decades of experience on Wall Street, he's gone all in on one thing: Bitcoin. Using his mathematics background, Fred Krueger has spotted that Bitcoin is following a power law, which statistically is extremely rare to observe. Krueger believes that it's this power law and rate of adoption that is going to send Bitcoin to $500,000 this cycle. Long term, Krueger believes we will see Bitcoin do something between a 32x increase to a 64x increase within the next 15 years. Make sure to stick around until the end of the video where Krueger breaks down how Bitcoin is following a power law and why it's so rare to observe. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Fred Krueger with his latest Bitcoin outlook.
If you're a millennial right now, and the average home buyer in America is 36 years old. I said, okay, let's just say you're a 36-year-old couple, right? Now you have a choice. You can go buy that home. The average home in America costs $500,000 right now. You can buy 500 and you can put 100 grand down towards a down payment, or you can buy, 1.3 Bitcoin with your 100K, right? And you can rent. Now, renting is going to save you money. Your mortgage is going to be higher priced than you're renting, right? So you're going to be able to take a little bit more off the top and stack that as well. So if you look at this and you sort of model it out with a reasonable power law or CAGR type assumption, you're going to end up with like 2 Bitcoin in 10 years if you rent and you put your money in Bitcoin. Now, if you have 2 Bitcoin in 10 years and Bitcoin's at 1 million, you're going to be way better off with the 2 Bitcoin than by having paid down, 100K off your 500K mortgage. Long term, this is a long-term thing. You got to do some long-term planning. But like if you're a millennial, you actually have an amazing opportunity right now. Now, 98% of the people will not take that opportunity. It's just a fact. They're going to do the wrong thing. You can always count on people to do the wrong thing because they're going to follow the trend. They're going to follow the herd, and the herd says, buy the house, settle down, plunk this, that's what the herd says. But you have to go the other way. If you want to get rich, if you want to do better than the average, you have to do something different than the average. And so I think, I encourage, younger people to say, your best bet right now is to put all your eggs in Bitcoin. That's your best bet. And if I was 30, that's 100. I would have 100% of my net worth in Bitcoin. That's what I would do. Maybe not 100. Maybe it'd be. maybe be 80, and then I would keep 20% just in cash, just for a rainy day in case I lost my job or I get hit by a car, right? Just so I wouldn't have to sell my Bitcoin at a bad time, So, but predominantly in Bitcoin, and play it out. So look, I mean, there's a lot of noise on, these flows, and everybody can get too obsessed with what were the flows yesterday or what are the flows today. You can read too much into these flows. Like when I started, I sort of looked at some of the flows daily, and then I realized everybody was looking at them very, very almost in too much minutia. And they were like, wow, there's flow, it's unstoppable. I was like, guys, like, Wall Street are momentum players, right? They, if the market feels toppy or goes down or something, they're going to be the first people not to step off the gas, right? And this is what happened, right? So they stopped for a while. Now, market's going to come back somehow. We don't know when. We don't know how this stuff's going to happen. But market's going to come back. But now we have this huge market that can participate on the upside, right? So this is a temperamental buyer, just like anybody else. But it's just, the good news is we now have this pool of capital, which is 10x what it used to be. And that's just great, right, for Bitcoin. And that's what's going to propel Bitcoin to that, that we need that pool of capital if we're going to get to 500,000 Bitcoin this cycle, which I think we will. But we need the massive volume of capital, and we now have that. So we don't need anything else. We don't even need sovereign wealth or corporates to put it on their belt. Nothing. We've got the thing. We got the ETF, and we got BlackRock supporting it. Well, the power law is all it is a statistical relationship that we observe that Bitcoin has. So, if we look at the price of Bitcoin. Most people, when they look at the price of Bitcoin, they have the following perception. Okay, it went up a lot in 2017. I remember that. It went up from 1,000 to 20,000. Then it crashed all the way down to 3,500. Then it went back all the way up to 60,000 in 2020. It stayed at sort of 60,000. It double dipped, and then it crashed again, and here we are, all-time highs. But if you look at it on a log basis, right, which you've done there, right, you've looked at this is on a linear to log basis, right? So you have linear, time is linear, and the basis is log. Now you start seeing some pattern in it, right? It does look like it's generally going up. Now, if you look at it on a log basis, where the time is also put on a log, you will notice that it's now going up in a line, right? So it's not just going up sort of in a logarithmic curve. Like this would sort of indicate that it's sort of bending down this way, right? But if you look at it on the log space, you'll see it's actually linear. And that log relationship means that Bitcoin is growing at a power of time. The equation is, yeah, exactly. So if you put things in a log space and you see a line like this, and you see that it is trending around a line, which it is, right? And it also happens to have peaks at the line and troughs at the line, but that's not even the critical part here. The critical part is that it is trending around a line, right? And it has, the red area is 2 standard deviations above the line. The green area is 1 standard deviation below the line, okay? And that's just an observed behavior, right? So we've observed that it doesn't ever go below 1 standard deviation of the below the line. Do you guys know what maybe I should say what a standard deviation is, right? So in a normal distribution is defined by 2 criteria. It's defined by its mean, its average, right, and its standard deviation. And here we have pattern, which is a mean. The mean is growing linearly with time, okay, here, and the standard deviation is right now it's 0.3 on this thing in log space. What that means is that you can either go up by 10 to the power 0.3, which means it's a double. That's one standard deviation. Or you can go down, you multiply by 10 to the power negative 0.3, which is equivalent to a cutting in two. So sort of over a year, the best way to think about this is we might double or we might go down by half in a year. Now, it's not the same to say over a long period of time, this thing tends to have some mean reversion to it, right? So if you're at one of these kind of bubble peaks, you have a higher probability of correcting back down towards the middle. So it's not sort of a memoryless process. It is a sort of a mean reverting process. So this power law tells us a lot about if in fact this is the correct model of Bitcoin. And the statistical data here is really strong, right? So as a person with a stats background, I can tell you don't see stuff like this in anywhere, right? With this kind of correlation. This is really, really, really rare, right? Like when I saw this for the first time, I was like, oh my God, and because you don't see this kind of behavior ever. And why this is so special is that you'll notice that it's starting at 10 to the minus 1 here, which is 10 cents, right? And it's going all the way up. And this was an earlier version that stopped in 2020, but of course now we're almost up to 100,000, right? So we're up to 10 to the power 6, right? So we really have gone, 10 to the power 5. So we've gone up 6 orders of magnitude in this chart, right? And the fact that you've gone 6 orders of magnitude and still stayed within the power law is just, earth-shattering, kind of like a discovery. So I was, I and others have observed this power law. And the first person to observe it was this crazy Italian physicist, Giovanni, who observed it in 2014. Nobody gave him the time of day. And everybody instead focused on stock to flow, which is a little bit of a version of this. I don't want to get too far into stock to flow because it's not really a great model, to be honest. And even
what did it get wrong relative to the log scale here?
Well, the log version is kind of why it works, right? So this is the fundamental reason why it works. Now, stock to flow, what it is the stock of Bitcoin it's sort of, by definition, it's a function of time. And so it's just a mathematical function of time, just because the emissions of Bitcoin are programmed, right? So it's because stock to flow is a monotonic function of time, it's correlated to time. But since the price of Bitcoin is correlated to time with the power law, it therefore follows that stock to flow will also be correlated with Bitcoin price. So there is some correlation, right, that we're observing. So the correlation of stock to flow, which led everybody to say stock to flow is right, comes from the fact that there was this power law. What they got wrong is that there was this implied causality between supply and price, which is not correct, right? And so, and it is not correct that the fact that the halving reduces the supply by half logically implies that the price has to double. That's just not correct, okay? And it is obviously the case that if you have a reduction in supply, that is good for the price of Bitcoin, but it doesn't logically follow that the price of Bitcoin should double. So, that's kind of it's just, we could go into a long discussion as to why I believe that, but basically the way I think that me and many others, right, are coming to the view that what we have with Bitcoin is we have a model where Bitcoin is getting adopted more and more and more in a very steady way, right? So you can see how many people have one Bitcoin, for example, right? And that number is also a power law with time. So the number of whole coiners is growing to the power of 1.4, as it turns out, okay? That's the power of you can also look at how many people have $1,000 worth of Bitcoin. And that is growing to the power 4. So that's a power law too. You can look at how many people have 1 million sats, okay? That's roughly a power of 3 to the of Bitcoin of time. So there's all these power laws which stem from the fact that Bitcoin is getting adopted. Why? Because it's better than gold. It's more movable than gold. It is more securitizable than gold. And of course it has the same hardness of gold. So you've got these 3 key assets that make Bitcoin a very useful product for many, many people on this planet. And so because of that, overall Bitcoin is growing. And it's growing at this rate. And the price is also growing at a faster rate. Now, it may be the case that Metcalfe's law is also at work, where the number of users is growing at, say, the cubed, and then Metcalfe's law takes that to the squares that, so that the power is multiplied by 2. So that gets you to power 6, roughly. But the main thing is usage is growing according to a power law, price is growing according to a power law, and also hash rate is growing according to a power law. And I think that's a very good mathematical model for how Bitcoin is working today.
Extremely well said.
That may change 20 years from now, right? It may change 10 years. A lot of people have said, Fred, the ETF is going to change it this year. And I'm saying, listen, I'm going to be and change it to the upside, right? People are like, this ETF's going to we're going to go to $1 million a year this year. Now, if that happens, great. All I can say is we've lived through 15 years of data, and we're very, very tightly within this power law. I would say as a statistician, I'm saying unless I see otherwise, I would expect the next 15 years to resemble the last 15 years. And if that's the case, I would expect Bitcoin to go up by 64 times over the next 15 years. And that's the number, right? So and this is where it's very hard to get your head around, right? But in a power law, if you double the amount of time that you give the process, right, you don't double the price. So in another 15 years, you don't double the price from 64,000. What you do is you take the price to the 6th power, 2 to the 6th power, which is 64, because the power law is roughly a power of 6. So something like somewhere between 32 and 64 times, that would be the statistical behavior of Bitcoin that we would expect in another 15 years. So it's amazing, right? And I believe that's probably roughly right? So do I believe it's exactly right? No. It's a model. Mm-hmm. But it gives you some mathematical framework to look at to make some estimations as to where we think Bitcoin's going to be.
So there's Fred Krueger's insights into why Bitcoin is the best long-term opportunity of all time. Despite the challenges millennials and Gen Z face compared to older generations, Krueger's mathematical analysis reveals Bitcoin's incredible potential. With a PhD in mathematics from Stanford and decades of experience on Wall Street, Krueger's confidence in Bitcoin is backed by his observation of its power law growth, a rare and statistically significant phenomenon. His predictions of Bitcoin reaching $500,000 this cycle and potentially increasing 32x to 64x over the next 15 years offers a fascinating outlook on the future of the digital asset. If you're looking to stay ahead in the crypto game, be sure to subscribe to our daily 5-minute crypto newsletter. Join thousands of subscribers who are enhancing their crypto investment strategies every day. Just click the first link in the description to subscribe now. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.